Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And I have with me none other than my sideshow Bob, Jonathan Dunsmoor. Jonathan, hello, and welcome to Crypto and Blockchain Talk.
Thank you for having me back, I think. I have not been called Sideshow Bob before, but all right. A little diabolical. Sure, okay, all right.
Well,
whatever works.
That makes me Krusty the Clown. But what I will say is that Jonathan Dunsmoor is the founder and principal of Dunsmoor Law. And because I have this very sexy voice going on, which is due to talking too much, I'm going to now let Jonathan roll in with a disclaimer while I have a sip of my tea. Jonathan, over to you.
Well, thank you so much, everybody who's listening. As you well know, this is all for educational purposes. The opinions that Aviva and I hold are our own. None of this is legal advice. None of this is financial advice. And none of this is investment advice. If you use any of the information you learn from us, you should also do your own research to make sure that that is a worthwhile investment or to take any action whatsoever. Thank you so much.
Excellent. Well, I think we should roll right in after that beautiful disclaimer. I think we should roll right into the news that two big banks are broadening their cryptocurrency interests. And what do I mean by that? Wells Fargo and JP Morgan have both registered a Bitcoin fund with the SEC. So Wells Fargo is partnering with the New York Digital Investment Group, which is a leading technology and financial services firm. And Wells Fargo is going to get an unknown percentage of sales through two of its subsidiaries. One of the subsidiaries is Wells Fargo Clearing Services, and the other one is their Advisors Financial Network. And JP Morgan is partnering also with the same people, New York Digital Investment Group, and they too will receive a percentage of sales through subsidiaries. Now, at the time of the filings that were done with the SEC, neither fund had completed any sales. So before we go any further, Jonathan, what in the world is a Bitcoin fund?
So the best way to describe a Bitcoin fund is a company that owns Bitcoin is the simplest way to do it. And what the SEC is particularly worried about is the volatility when it comes to Bitcoin and the various assets that may underline what affects Bitcoin. Because while Bitcoin is a quote-unquote independent asset, there is mining infrastructure, there is all types of infrastructure who basically we have no way of influencing or kind of predicting the market, right? Bitcoin can rise today and then fall tomorrow off of just pure trade volume. It's such a volatile asset that the SEC claims that they're unwilling to create an electronically traded fund on it.
We know the history of JP Morgan and crypto. We know in the very beginning they called it every name in the book. And then earlier this year, JP Morgan cautiously recommended that their investors consider adding Bitcoin to their portfolio, saying that allocations of up to 1% could achieve efficient gains. These two banks are not the only ones who are hedging their bets in crypto. You have Goldman Sachs, you have BNY Mellon. These guys are basically funneling millions of dollars not only into crypto startups, but into creating crypto platforms for digital assets, which is incredible if you think about the 180 that really is happening here, because there was a time where banks were, and HSBC still is in this league of pushing against crypto. HSBC doesn't look like that they're really a crypto-friendly bank, but then you have these other ones that seem to be embracing, and that leads me now to what JP Morgan actually said yesterday. They basically said, quote unquote, it's a bad sign if Bitcoin doesn't return to 60,000 soon. They really feel that this is something where signals are showing them that if we don't reach that 60,000 mark, it's going to show it's just hype, that it's nothing substantial behind this cryptocurrency, it looks like. What do you feel
I
about
think that is the most ridiculous. I mean, why are we listening to bankers? The same bankers that would like to create an ETF are the same bankers who are saying, oh, if Bitcoin doesn't reach this, it's worthless, or it's going to collapse, or all of these other kind of stupid things. Like, this is absolutely driving me crazy. And I'm not sure if it's for the headlines or the lulls or who the hell's doing this, but I don't understand why, the bigger media is giving these people attention. Bitcoin has proven over and over again that it is rising in value. There's a need for it globally. With the fall of Afghanistan, the Afghans who have cryptocurrency are going to be really happy that they have that, as opposed to trying to get their cash out of Afghani banks. All things considered, I think that listening to traditional bankers when it comes to the future of finance has already proven them wrong in the last 10 years, and it will continue to prove them wrong as we develop more into DeFi, as we start getting these challenger banks into the system, whether it's Avante or others. I think that we're going to start really seeing a real kind of kick in the ass when it comes to what does it mean to be a bank. It used to mean you have security and you have trust with this institution, that this institution isn't going to screw you over too much, and it's not going to do the terrible things that it's done in the last. And that's what we really need to focus back on. And I think that there's a lot of really good startups that are really kind of challenging that model.
Well, it's really interesting because, the strategists at JP Morgan are apparently worried. And just for everyone's knowledge, Bitcoin rose as high as 64,870 at the time of the listing of Coinbase, but of course has retreated way back below that. I mean, today it's at 47. That means that the cryptocurrency is still up about 90% year to date. So it's actually really interesting that they talked about also Coinbase in the last time, because there's a couple of things about Coinbase which have also been in the news. And one of them is that Coinbase is buying $500 million in crypto, and they're going to also invest their future profits into a crypto portfolio. And according to their chief financial officer, they plan to invest in Ethereum, other proof of stake assets, DeFi tokens, and other crypto assets that they believe, they're good for trading on their own platform. But on top of that, they've also now built a $4 billion cash stockpile, because they are right now preparing for closer regulatory scrutiny. Let me just repeat that last sentence so that it really gets into the gray and the white matter. So they've built a $4 billion cash stockpile because they've benefited from this trading frenzy that's been happening, and they're preparing for closer regulatory scrutiny. So when I read that sentence, what that means to me is they know that they're heading for a big fine. Now, they've already been fined, and we actually did a podcast on when the CFTC levied against them a pretty substantial fine in the millions for a number of infractions of the law. And this is prior to their listing, which really confused me, because I thought that once you would get fined $6.5 million for false, misleading, or inaccurate reporting and wash trading, I thought that they would be like, well, no, you're not listing on any stock market of ours. It shows that you can't even keep house correctly. But, what do I know? Anyway, the whole point is that they're right now squirreling away this money because they're preparing for this closer regulatory scrutiny. So I don't know if I finished my last sentence, where that to me reads that they know that they've done quite a bit of wrong and they know they're going to be fined. Did I read into that incorrectly? Am I reading too much into that? What's going on there?
I think there may be a little bit too much of the tea leaf reading there, because I think that anybody who's in this space should invest in this space, right? And it makes sense. If you're Coinbase and you're, dealing in crypto assets, you should probably hold those assets as, whether it's a custodian or continue to invest in those assets, as long as it's, properly reported as it should be, the SEC reporting rules. And I think for them, as they continue to grow and expand, probably, calling it here first, folks, or maybe here first, these centralized exchanges are going to find themselves in a position in which they are acquired by either investment banks or retail banks, depending on current regulations, current or pending regulations. And I think that's where we'll ultimately start seeing some of the sexes become integrated into the traditional finance market. And we've already seen that with, USAA, I believe, was one of the first to introduce a crypto wallet for their customers. And I think it's only going to expand from there and to the point where it just makes sense to go out here and buy one of these centralized exchanges. And, one of the benefits of going public is really easy to put an idea on what you're worth and how to acquire you and what's available. And so I think all of the sexes going public right now, whether that's through a reverse merger or SPAC or direct public offering like Coinbase, I think that's primarily their reason. They see the writing on the wall that they want to create as much value as possible so that when the time comes and JP Morgan or Wells Fargo recognizes that they can't win by building it their own way, that they should just simply go and acquire. I think by then crypto will have won a very large victory.
It's not like a bank can go out and buy sexes, especially if they haven't complied with the SEC's paperwork. Sure, it can't be as simple as that because most sexes, I'm willing to bet you, have absolutely not gone through the rigmarole of the paperwork, so there can only, even though there's a multitude of sexes out there, I could probably count on one hand how many have gone through regulatory scrutiny through any American financial overarching body like the SEC or the CFTC. Wouldn't you agree on that?
And so you're absolutely right. You really can't get into a position in which you could say a traditional bank who's subject to Bank Secrecy Acts, who's subject to all these different rules and reporting requirements, could go out and purchase a DEX. But what makes a DEX different than a CEX, CEX, is that it's a centralized repository, and the counterparties are known. If I were Bank of America, or if I were JP Morgan, or if someone at Wells Fargo would listen to me, I would go out and tell Coinbase, we'll give you, I'd do a bear hug on Coinbase in a heartbeat. I don't know what Wells Fargo's market cap is, but I would bear hug their ass. Whether that's Coinbase bear hug Wells Fargo, or if Wells Fargo was serious about keeping their title as longest financial institution or whatever in the United States, I would go out and offer a substantial above asking price for Coinbase. This is no insider information. This is just pure speculation. That's what I would do. If I was any financial institution right now with any clout, with any type of real question of what the future looks like and what the ultimate success of the banking and financial industry looks like, I would go be hyper aggressive and purchase a centralized exchange, a centralized American cryptocurrency exchange.
Going back to Coinbase and the fact that they're building their $4 billion cash stockpile, and they're going to be doing a whole host of other things that we just talked about, a recent surge in trading, including amongst individual investors, such as Elon Musk, who, of course, he did his massive $1.5 billion buy through Coinbase. These transactions have really increased Coinbase's profits because the company earned $1.61 billion during the second quarter, compared with $32 million just a year earlier. And the company, by the way, this is very interesting, has 9,000 institutional customers. So it's quite an impressive story for a company that isn't really that old, and they are now worth not only billions, but they have this command of 9,000 institutional customers. They're dealing with Elon Musk and all his craziness, and it's quite interesting to see what's going to happen because Gary Gensler is absolutely paying close attention to all of these big players in the cryptosphere. So it's going to be interesting to see what happens. So I just wanted to talk about that for a moment before I actually start to segue into, is Bitcoin really going to double its price in 2021? And a lot of people, I think, are buying into the hype that is really being put forward by a lot of people within this space. And I'm going to say again to all of our listeners, we are just talking about this. Please do not act on what we are saying as any kind of signal for you to go out and buy Bitcoin like it's air. It's certainly not the case. You have to do a lot of due diligence. But the cryptocurrency platform BlockFi announced that they are signing a multi-year partnership with Cade Cunningham, who was selected by the Detroit Pistons with the number 1 overall pick in the National Basketball Association's 2021 draft. And he is going to receive his signing bonus from BlockFi directly in Bitcoin. And just to let you guys know something, I mean, if you don't know how to play basketball or if you have children who you want them to have a good life ahead of them, this guy's contract over the next 4 years is worth $45.6 million. So he's earning $10.1 million during the 2021 season. So I just want to ask you this question. There's been a lot in the past. Steven Seagal, DJ Khaled, Floyd Mayweather. A lot of these people have ended up being penalized by a lot of different bodies within the U.S. government, like the SEC. They have been given stiff penalties for actually promoting different cryptocurrencies. How is this different, what Cade Cunningham is doing, to, let's say, these other gentlemen who have been heavily fined by the SEC?
That's an excellent question. One of the problems that, without speaking directly about the cases that have been, current, there has been a number of people that are violating SEC touting rules. And what that means is they're not disclosing that they're getting paid or they're getting compensated in the token, and they're promoting it left and right, whether that's possibly NFTs or, ICOs or IDOs or IPOs or whatever, is going on with the latest acronyms. And that's a huge issue. That's something that, can't occur within traditional security. It is a direct violation of, like I said, SEC touting rules. Whereas this, if you're just getting paid as a commentator, a sponsor, an influencer in cryptocurrencies that are not securities, then you don't have to abide by those rules. Now, you do have to abide by the FTC, Federal Trade Commission, and the FCC, Federal Communication Commission, on sponsorships and announcing these types of things. So I can't go out and promote Cardano and have significant clients in that base. So I can't go out there and promote Cardano without saying kind of something like I just did, or saying that I'm getting paid to promote Cardano. That's the difference. It is a very subtle difference, and it is something that I deal with general counsels all the time in the cryptocurrency space of, sir, we'd like this company to disclose under touting rules, and I say to them, why are you treating this as a tout if you're telling the SEC that you're not a security? That doesn't make sense. It kind of violates what we call legal objectivism and really kind of negates whatever type of case, God forbid, the SEC does bring against you, because if one of your stipulations for your influencers or the people who are helping you promote your product are that you require them to obey by SEC touting rules, well, then guess what? The SEC is going to go, look, you even require that in your contract. So, it's one of those situations where if I am an outside party and I have no affiliation with that project, or I have no specific thing engaged in that cryptocurrency, then I can absolutely be paid in that. Now, one of the questions lies in if, let's say, I did have a massive position in Cardano and I'm sitting here, preaching about it and saying how it's going to overturn Ethereum and Bitcoin, and it's going to be the number one current cryptocurrency in the world. All that sarcasm, guys. So if that didn't come across, while I do like some of the things that they're doing, I don't believe those that necessarily the hype. And so, when it comes to that, those types of disclosures are something that even Gary Gensler has said the apes of Wall Street bets are simply promoting things that they believe in. No similar difference than what the talking heads on MSNBC and CNN and all these other major news shows kind of talk about while they hold the positions. So disclosure of positions is something that we've all kind of had to deal with and figure out, what this really means when it comes to cryptocurrencies as a security, as a quote-unquote commodity, dear CFTC. And, definitely with the IRS, they don't care. They believe it's all property. And as long as you pay it when a transaction's done, they're generally happy. With that being said, I think that the more people that are getting paid in cryptocurrency is going to increase a wealth gap. I think we've already seen that with a number of professional athletes who have decided to get paid in cryptocurrency. Part of me believes that that's a really good idea, because if they can use that as an alternative form of investment, I think that really works in their favor, because the average NFL player, for example, only lasts, I think, 3 years in the NFL. And so when you think about that, that person is only 25, 26, 27 years old, and their career, quote unquote, is done. And so if they do not have the luxury of one of these massive contracts, or, they've been unwise in their wealth and they've lost it all, maybe having it in cryptocurrency or maybe having a portion of it in cryptocurrency will allow them to not end up owing the IRS or God forbid, in the, as my mother would say, the poorhouse. And so, I think overall it's a good thing for the industry, and I wish more companies would offer payment in cryptocurrency or bonuses possibly in cryptocurrency. I think that would be easy to manage. And I think the people at Anchorage or Fireblocks or ETH Trust or any of these folks would be, more than happy to help accommodate that. I haven't spoken to any of them about it, but I think that I know enough people at all of those institutions to say that that's probably a fair assessment.
So you have people who are now very much, a lot of these alliances, a lot of these sponsorship deals are obviously happening. I'm just looking forward to who Coinbase is going to have as their mascot. But, Coinbase, as we already said, so they're going to be buying $500 million in crypto. They're going to allocate 10% of their quarterly profits into their crypto assets portfolio that they're creating. And it's actually really interesting because another company called Palantir, I don't know if you know about this, they just bought $50 million in physical gold. Okay. Now, it's quite interesting because the company was looking if they were going to follow Tesla and expand into cryptocurrencies, or if it's something that's going to be in the future. And one of their top-level gentlemen was asked if Bitcoin or other cryptocurrencies would be on the balance sheet. And he actually said the short answer is yes, we're thinking about it, and we've even discussed this internally. And the gentleman who, by the way, who gave that quote was Dave Glazer, who is their chief financial officer, so their CFO. But it's interesting that they actually decided to put 50 million into 100-ounce gold bars. This was a decision that they made after they looked at Tesla diversifying into Bitcoin. They made a choice, and they chose gold. Now, I just want to know, do you think that Bitcoin's volatility is going to drive investors back into gold? Because there are people who really believe this. As you can see by Palantir's decision, they could have chose path left, crypto, or path right, gold. And they chose gold at this time, even though, yes, they made in their statement that they'd look into crypto as perhaps another leg of investment. They still went with gold first. Now, you see, both gold and Bitcoin prices have swung between gains and losses this year. Do you think people should be expecting it to appreciate like gold? Can you see more companies doing what Palantir said, or do you see more companies choosing the Tesla path?
I think it's a combination of both. Companies right now, if you look on the balance sheets, are cash heavy as hell. They're really kind of almost limited into what they can get into from a gap perspective, a financial perspective, without raising too many red flags and also possibly becoming a 40 Act company or having to divulge all the things that they're messing with just as an investment purpose, right? And so I think getting in traditional assets, whether that be gold, whether that ironically be the new gold of traditional cryptocurrency of Bitcoin, Ethereum, so on, I think is really beneficial to everyone. Some of the best universities as of late, including Harvard and Penn and Chapel Hill, have all kind of started switching into almost a hedge fund model where they're able to, diversify what they hold. And I think gold and crypto, or quote unquote traditional crypto, are really good return on investments.
The way I'm going to close this out is going to be interesting. So I'm just going to give you a few pieces to mull over. Hedge fund manager Ray Dalio, despite owning an undisclosed amount of Bitcoin, said, if you put a gun to my head and you said I can only have one, I would choose gold. The second thing I want to tell you is that American investor Tyler Winklevoss, who we know is half of the Winklevi brothers, who founded Winklevoss Capital Management as well as Gemini Crypto Exchange, he said last year, of course, and of course he would say this, he has a crypto exchange, that Bitcoin is gold 2.0 and that it will disrupt gold. There are many other people who I could quote, who really do lean one way or the other. And of course, many bullish investors view Bitcoin as digital gold and a hedge against inflation because they're expecting the cryptocurrency to appreciate over time. So I'm going to ask you this question. Jonathan, the door to the left says Bitcoin. The door to the right says gold. Where are you going?
Be in an awkward position.
But I got to, this is what makes a podcast interesting, the dilemmas of life. So which door are you going through for a future and, to really see how your money will operate in the future? Are you going through the left or the right? Are you going through the Bitcoin door or the gold door?
Oh, I'm an attorney, so I always have to say it depends. But I think there is a third option, but we are not able to discuss it at this point.
I'm not giving you a third door. You only have two doors. Pick one.
If I only have two doors, then I would always and hands down go with Bitcoin. I don't know if anybody has seen a London gold bar in person. I encourage you to try to visit, assuming that they're open due to COVID. But, one of the federal banks or national banks, if you're around a national bank in another country where they have, such kind of thing on display. It is impossibly small, but incredibly heavy. And so regardless of whether you're looking at it from an investment standpoint or you're looking at it from the world is burning and I've got to hold on to this precious asset as long as I can, I think that overall it is great. There's a greater likelihood that the internet or some form of the internet, whether that's through Bluetooth or whatever, is going to be available, and therefore Bitcoin will be more transactable than me carrying around a bar or two worth, I think a London bar this time is probably $400,000 or $500,000, give or take. I think that that's a little bit just ridiculous. And storing and insuring and all of those other kind of hurdles are just nothing short of outrageous. So if you're a big institution and you don't need to worry about that, it's a little bit different. The hedges are there. But as you said, earlier in this podcast, BTC is up almost 100% from the falls within this year. And I think that it has a lot more room to climb as as miners leave China and we arguably start securing a really good network of decentralized mining that does not rely on those authoritative powers. And so we'll see. I think time will tell, but history thus far has proven that while gold is a very respectable asset and something that should always be held in some form or fashion, I don't know if it's to the same degree that Bitcoin is in this analogy.
I'm going to be looking at that price of gold and the price of Bitcoin and tracking it so that I can, in let's say a year from now, revisit this topic and see if your choice of door was the right one. I think that's a good way to play that. I'm going to put it in my diary now. Jonathan, I would like to thank you so much for coming on to Crypto and Blockchain Talk. You're an amazing person. You always supply me with a lot of information and a damn good laugh. Thanks again for coming on.
I am honored to always come on, even though I was called, Sideshow Bob. But truthfully, I think that there's a lot of good and exciting things to come, and that people are doing really well in learning on this podcast. And I applaud you for your efforts, because it is something where it is tough to find really good, reliable information on what is a very tough and complex and ever-evolving topic.
Well, I would like to thank you very much for those compliments. And I'd also like to thank our listeners for tuning in today. Please remember to tell your friends and family that they can download this gorgeous podcast series on a multitude of podcasting platforms. The full list is on cryptoandblockchaintalk.com. And that is cryptoandblockchaintalk.com. You can find everything there that you need to listen to this podcast. And of course, you can also find us just by typing Crypto and Blockchain Talk into Google, and one of the podcasting platforms near you should pop up. In addition, you can listen to this podcast 24/7, 365 on our sister radio station, Crypto 24 Radio. Crypto 24 Radio plays around the world, news, music, and more. We love to hear from you. So first of all, you can contact us or leave us gorgeous comments on one of our social media platforms, which are Twitter, Facebook, and Instagram. But we do love to hear from you directly. So please email us at education@savvydigital. That's education@savvy, SAVII digital.com. Again, thank you for taking time out of your busy schedule to listen to us. We know that you have many things going on in your life, and we also know that there's many podcasts that you can choose from. So when you tune into us, it means the world. So please be safe, take care, and goodbye for now.